Welcome to TheoTrade. This is Don Kaufman. March 16th, 2022, 15 minutes left in this Wednesday trading session. Fed up with inflation. Of course, this is an FOMC day. Right up until the point of the press conference, the markets were handling this rather well. They tanked, they rallied, we laughed, we cried. A lot of volatility inside of today's trading session. But let's get down to some of the details. Not even so much about the Fed, because quite frankly, again, they did exactly what we anticipated them to do. What was that? 25 basis points increase. We have liftoff. And then they simply said, slow and steady. And every FOMC meeting from this point on is a meeting that is quote unquote live. Live simply means, hey, they could raise rates at any of the meetings throughout the course of the rest of the year. It's live. Little bit of information on quantitative tightening, but lo and behold, again, there was a scary moment in some of the statements. It looked a little rough. The press conference came out. They loved it. Jerome Powell, in the most dovish way possible, is saying, well, there's going to be some quantitative tightening. Again, nothing out of the ordinary. And a lot of the geopolitical risks are weighing heavily on the Fed. I guess the irony of that, those geopolitical risks, although kind of pessimistic, overall for market conditions, were actually looked at as being optimistic in relation to the Fed because those geopolitical conditions exist. Yes, we are talking about Eastern Europe. Those geopolitical conditions existing are actually keeping the Fed, if you will, from jamming rates higher and really starting to crunch down on quantitative tightening. And again, the marketplace right now, strictly from my opinion, is rallying, but for all the wrong reasons. And again, you have to really look at some of the price action today. You want some volatility? You got volatility. I mean, we traded 43.40. Then we traded roughly down to 42.40. That's a 100-point decline, only followed by, well, here we are again, 90 points higher. As I said, you want volatility, and you got it. But let's get down to real business at this point. What does the market say, other than the fact that it's rallied? The Nasdaq loves it. I mean, really, the Nasdaq loves it, because I'll tell you what, it's ultimately saying that the interest rates, they're going to go up, but it's much more stable. And it's the Nasdaq. And again, sell-side activity inside of the ZN has been fierce lately. And sell-side activity in the ZN, which is the 10-year, simply means the interest rates are exploding. Okay, and they are just exploding up. I'm filling some trades here as we're going along. If you look back over 3 years, this is the highest rate we've had since, well, all the way back here, ultimately in 2019. But if you read into the Fed, as I said, fed up with inflation, right? Inflation might be hot, but geopolitical risks are even hotter. And this is going to, stave off some of the Fed. It's not going to stave off inflation. It's why I'm fed up with the inflation. Nevertheless, the Nasdaq, they bought into it hook, line, and sinker. And if they said, well, rates are not necessarily going to explode higher, the Nasdaq sure is going to explode higher. But you got to go deeper than that. For those of us that are into some premium selling, there's one great aspect that happened today, and that has to do with the VIX. Okay, good, bad, or indifferent, whatever you might think, the VIX really came down hard in the last two trading sessions. We finally have broken what has been just wicked, if you will, uptrend, right? Wicked uptrend of the VIX, and it was just hanging out here in that, 30, 32 handle. We finally collapsed a little bit on VIX. In doing so, it has sucked so much of the premium. Forget the fact that we're up almost 2%. Forget the fact the Nasdaq's up. It really sucked the premium out of the money puts, I'm looking through my portfolio and I'm like, wow, this is good stuff. And it is good stuff because the premium, almost every position that I have on right now is ready to come off and come off profitably. I'm like up 46%, up 46%. That I'm cruising over to thinkorswim and I'm looking up 47%, up 28%. These positions were all down ultimately until today. So what do we have here? It's premium seller's dream at this particular point in time. That dream is all about, well, I sold premium in the midst of heavy volatility. Volatility collapsed. I'm going to buy back that premium. Let's do it again. Now, what else is volatility saying? For the first time in quite a long time, take a look at the volatility futures right along with me. And again, I'll explain what volatility futures are saying because I think that this is of critical importance to the forward future. You're talking about markets. Forget what you might think in the midst of volatility about price action. Like right now, to me, the least important thing right now is that the S&Ps are up 2%. And I know that sounds like, oh, you must be bearish. Okay, that's not what I'm about. We are still in the midst of volatility. And to further that conversation, okay, we are going to look specifically at the volatility futures. And what the volatility futures ultimately say at this point in time, okay, take a look. Well, the April versus May versus June versus July, the curve has actually dropped, if you will, into a very, very mild contango. And you're like, well, what's contango? Contango is when this April, and again, if I were to like script this out over here, this, okay, being April is just so slightly lower. It's like 27, for instance, 85. And then May, okay, here's May. May is just a hair higher. And then the irony is we just kind of flatten out in here. The point that I want to make is the vol skew, it really isn't in full-blown contango. It's flat, which indicates one thing, okay? Don't put away your crash helmets just yet. And I'm not saying that again per se to be bearish in this case. I'm just reading into the volatility futures. The skew is flat for a reason. It's a rally. Is it a rip your face off rally? Sure. At this point, the Nasdaq, it really has caught fire to the upside. But we all knew the Nasdaq is an incredibly oversold territory. To see a bounce back up to 14,000, sure, absolutely makes sense. If you take a look at how uniform this move has been today, like if you're looking at this and I've already heard people say this, it's an unprecedented rally. Really? You want some precedence to it? How about this? Okay. There's 7 minutes to go to the cash close. We are sitting basically on the upper edge of the expected move. Expected move this week is $145. I don't want to hear the word unprecedented. We're exactly where we should be. We're on the edge of an expected move. Here we are on a Wednesday. This stuff is just mission critical. Nothing outlandish has actually occurred other than the fact that we moved exactly what the marketplace was handicapping us to do. And the volatility crush is actually helping those of us that have sold premium. If you're a premium seller and you've sold puts, oh, it's a breath of fresh air. Frankly, I hope we rally up just a little bit more tomorrow, cover all of these lovely puts because they're just, 48%, it is doing it for me, right? Cover all the puts we sold, then let's just do it again. Let's see some volatility. Again, the story here, though, is specific to the volatility futures. They're just screaming like, don't put away the crash helmet just yet. We are still absolutely unequivocally in the midst of volatility. Last, but definitely not least, I want to take a quick glance at some of the metals. Gold, okay? Gold specifically. Huge move to the upside, collapses back down. I found it interesting based on, what the Fed said, slow and steady, except I was surprised that some of the metals rallied back up, on this. And I really am. I'm rather surprised. They'd initially sold off and rallied back up. The volatility inside of the metals is phenomenal. I'm going to be taking a position inside of the GLD. Likely going to get executed on this. I've already got one contract on. What I'm trying to do, though, is just build a quick in-out spread here. Skew is really, really favorable. You can see I've already filled some of the position for 86 cents, trading 88 cents. I'll continue to try to fill this in tomorrow's trading session, given the fact that we only have 4 minutes left. But a nice bullish position presently inside of GLT. Maybe reversion back up to 185. Call me crazy. We could be at 190. Again, some of the action in some of the metals, okay, commodities in general, kind of surprised me following the FOMC announcement. Why? It's just not what I would have anticipated. Now, granted, I looked at the dollar and the dollar has come off. The dollar is still poised to have a huge breakout to the upside. Again, if you looked, okay, at all of the risk factors that have kind of, comprised some of the volatility in and around this marketplace over the last, now we're, 2-3 months into this, none of those major risk factors have really abated. Have the bonds rallied back up? No. Okay. What's going on inside of gold? Kind of hanging out, poised to possibly rally again, right? Look at volatility futures. They're flat. VVIX has come down dramatically, but we're still a 115 VVIX. All the factors we need in place for volatility are still very much in place. At this point, we treat it as the quintessential rip your face off rally. And remember what I said. The marketplace, look at this, coming into the close, it is doing exactly what it's supposed to. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.